Good morning, my name's James Hughes, Chief Market Analyst here at Scope Markets, and this is your daily briefing. Global stocks pushed higher on Tuesday in light trading ahead of one of the most uncertain earnings seasons on record after the coronavirus pandemic upended the world's economy. Volumes are more than 30% below average in many Asian markets as traders braced for news from global heavyweights including JP Morgan and Wells Fargo. Stocks were higher in the majority of Asian markets, including South Korea and Japan, while futures for the US and Europe also pushed higher. As earnings season kicks off this week, traders are looking for a sense of just how badly some of the major US and European companies will be hit by the coronavirus outbreak. We will likely see a number of dividends cancelled, earnings projections missed, and forward guidance almost completely wiped out. With the outbreak causing chaos around the world, investors seem to have been flying blind when it comes to individual stocks. The stock market, including the Dow Jones and S&P 500, paint a slightly confusing picture as they tend to rally on the health aspect of the virus at the moment rather than the economic aspect. We are seeing numbers in Europe start to fall as discussions get underway about ending lockdowns in the likes of Spain and Italy. However, what we must be certain of is that once the health aspect of the virus has subsided, the economic impact will be just as aggressive, which of course could cause more big falls in the indices. Earnings season will finally give us a chance to look at how the companies that make up these indices are faring. This week it will be US banks and finance and financial firms, which take centre stage, led by JP Morgan, Citigroup, Bank of America, BlackRock, Goldman Sachs and Wells Fargo. Tuesday will also see the release of earnings from airline Delta Airlines. Delta Airlines is actually seen as one of the stronger airlines heading into this crisis, and today's figures could give us an indication of just how well placed there will be once the crisis finishes. Away from earnings, we will look towards the oil market yet again as it still languishes lower at around $22 a barrel, and this is despite a global effort from oil-producing nations to cut output by around 20%. Now this is being seen as markets by just not enough to solve the issue. There is a similar story in Europe as well, which will get focused today as finance ministers have agreed a €500 billion deal. But again, when you compare that to the US and the Federal Reserve, the Eurozone is just being seen as not doing enough.